Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the market, congrats to the bears, congrats to the volatility traders, finally getting significant follow through. And this is definitely a dump that puts us on par with the December dump as far as the magnitude, significant volume, and RSI levels. Again, I was pointing out in recent videos how in 2019, the 4-hour RSI has bounced from 27 at the lowest point multiple times. And if we were to break that, that's when we start to look at the potential that this is more significant than a pullback like the May pullback, and perhaps it is then in line with the potential of the December pullback. So that's where we stand. Extremely notably weak day. QQQ was down over 4% at one point, S&P 500 down 3.5%. We did have a bounce at the end of the day, and that leaves us with a bit of ambiguity as to what to expect for tomorrow. If we saw a close at the low of the day, then we know a likely gap down open scenario is coming. If we were to see a gap down and we open below 281.72, that would be our third gap down open in a row. That's a bullish reversal pattern. We would be looking for the bears to get exhausted at that point and just a short-term oversold bounce looking to take place. So looking at the bounce at the end of the day, again, didn't really do much significant big picture. 15-minute time frame, short covering, absolutely, but we're still in a 15-minute downtrend. Anything under 285.51 was a lower high. We dropped, hit the low. Top of the bounce was 284.79, and here in after hours, you're seeing further weakness. So depending on where we open is going to determine what we're looking to do. If we were to see a higher open tomorrow, we would then zoom out and look for an hourly lower high and potential bearish entries. And this is referring to shorter term plays. If you're looking midterm, we're definitely scouting bullish bounces with the 4-hour RSI down in the teens. The 12-hour RSI is down at 16. The lowest the 12-hour RSI got on the December dump was down at 14. So we're almost at RSI levels seen on that December dump on the 12-hour time frame. And again, I just look around at all different time frames and I see what our RSI level is and how beat up it's been in the past. So the 6-hour, it's lower than it got in the December dump right now. It's not as low as it got on the initial dump in October. So just looking for a feel of things as to comparable previous historical events. So for me personally, I love playing oversold bounces, so that's the direction I'm looking in, and that's the direction I was looking in this morning. And it ended up with me doing a whole bunch of trading just to continually lower cost basis of SPXL, and that ended up with me getting in too early initially, exiting some break even, and then just little scalps, 10, 20 cent scalps throughout the day, because that's my edge as a trader, oversold bounces. Other traders don't have that edge, so that's not the style that they want to take on. I personally, at this point, like I said, I'm looking for bounces, but the size of this pullback has now entered head and shoulders caution on the weekly time frame. The size of the pullback, I expect 273.09 to hold initially, but we have to watch for the bounce and the inability to break the all-time high and then rolling over and losing the weekly uptrend. That would be notable if that were to play out. Same thing, I'm looking for bounces because of the 4-hour, 6-hour, 12-hour RSI, but once those RSI levels cool off, we're going to be looking for daily lower highs, and you better believe there's going to be a lot of bears scouting for entries on those daily lower highs. That's another thing I'll be watching for. So short term, I'm looking bullish, but perhaps 3-4 days from now, I might be looking for a bearish entry, and that's my style as a short-term day trader, and that's where I'm looking into tomorrow. Bounces into tomorrow. And it's the kind of setup where if we start weak and I don't see a setup that I like, I'll just patiently sit on my hands and not trade until I do see a setup that I like. But there's opportunity all over there. The bull miners were on fire. The volatility index was on fire. And again, we have to see 15-minute trend changes for any kind of meaningful bounce, hourly trend changes to see any significant cooling off of the 4-hour, 6-hour, 12-hour RSI levels. So how we open tomorrow is going to determine a lot. So here we are testing the lows right now in extended hours. So the gap down possibility does still remain. And that would be our third gap down open. which would be scouting a bounce. IWM. So IWM had a bit of a more significant lower wick at the end of the day, but again, giving it back. So the 15-minute time frame got up to resistance, but we didn't change the trend. We didn't get follow through. It was just shorts covering, and we'll be watching 146.21. Pretty much, depending on where we open, we're either going to see gap down opens where we'll be looking for buying, or if we see higher opens, the lows of today on any individual name will be a key support level, and the high of the end of the day bounce will be a key resistance level. I would love to see an open, well, I love oversold bounces, so I'd love to see a gap down open. But if we don't get a gap down, I want to open within that range so I can just patiently say, all right, if we break the support level, the low of today, clear that the bounce is not ready yet. And if we break the high of the afternoon bounce today, that shows us that the momentum is shifting, and an hourly oversold bounce will then be looking to play out. QQQ, again, so notably weak, down 4%. On this huge gap down open, daily RSI hitting oversold. Again, you can play the same game. Just watch those RSI levels and compare them historically to what we've seen. And we're getting close to some of the most extreme RSI levels we've seen in the recent past. And in the past, in December, that was a great opportunity for dip buying. And if you are newer to the channel, go back and watch December 24th. Watch that video I put out from that day. And I gave an analogy and why I was looking to play the oversold bounce. And it's similar to a certain degree with where we stand right now. So QQQ, the high of the bounce will be a key resistance level up at 181.19, and 179.20 will be support. And we'll see if the bulls are able to open above that level. Otherwise, a gap down open will be looking for the potential of buying opportunity. My aggressiveness when I'm playing oversold bounces matches the bears. The bears weren't very aggressive today, and you might be hearing me say that and say, what are you talking about? I just mean in terms of short-term RSI levels. We already know that the longer-term RSI levels are beat up, but the 5-minute RSI on SPY, aside from this morning first thing, it didn't really get crushed. At the end of the day, we had that final push down where we had that little V-shaped recovery, but the 5 and 15-minute RSI, well, the 15-minute dropped a couple times more, but it was a very contained selling day. We didn't have an all-out extreme dump. These little short-term 5-minute bounces kept cooling off the RSI level and allowing for another leg down. So it's a different scenario where when you see that all-out flush and it gets extreme, that clears the order book. And all of that selling and all those stop losses triggering wipe that order book clean, and then the V-shaped recovery bounce happens because there's a lack of resistance as the order book just got flushed out, essentially. So when we're not seeing that flush and we're seeing the lower highs and slow and steady little lower lows, we don't have that extreme V-shaped recovery. And really, the most significant selling on the short-term time frame was this move between 2 and 3 p.m., and then that's when we did get the V-shaped recovery. So that's something that I look for to go aggressive. If the bears are real aggressive, I already know all the longer-term time frames are oversold. If the short-term time frames get extreme, that's when I start getting aggressive, looking for that V-shaped bounce. So XLF, same thing, 15-minute. We look for the high of the bounce, 26.81 is key resistance. We're already below the low of today, and 26.48. If we break that level tomorrow, we're going to be looking down at 26.43 and a gap to fill at 26.29. XLV, also weak, not nearly as beat up on some of the shorter term time frames. You can see the 4-hour RSI just getting oversold now. So the high of the bounce at the end of the day is the most important resistance level. That's up at 89.12, 89.14 actually. And the most important support is going to be 88.19. Again, fairly contained sell-off, 15-minute, little bounces on the way down, and 15-minute trends have to change step number 1 for any oversold bounce. XBI, 15-minute bounce at the end of the day, resistance up at 81.72, 80.45 is support, and don't forget our key long drawn-out pattern, 79.31 is very important because this equilibrium has been 10 months in the making, and if we break 79.31, it is a very notable bear break, and if we hold it, it's going to be a higher low, and we'll look to continue to tighten here. So there is a potential play in the biotech sector off of 79.31 support. The closer we get to that support level, the less risk there is, and the better bottom fishing play it is. So if we were to see a gap down open tomorrow under 80.45, let's see if 79.31 support is defended by the bulls. So looking at the VIX here, there was really no real red flag to start the morning. We broke the high of Friday first thing, and we certainly fended off any consolidation. It's a bearish reversal candle from Friday. We looked at the hourly time frame. The hourly had to hold 17 and 1760, and we certainly did. So very significant move, and the fact that we closed at the high of the day, we'll see if we end up getting a gap up open. If you are looking to play market bounces, another way to play it is going bearish the volatility index, but you certainly want to be very comfortable with at least watching and paper trading the volatility index for quite some time before you jump into that realm, as it is very high risk, high reward as a trading instrument. But we have TVIX and UVXY with significant upside today. Big gap up open, strong close. We're watching the hourly uptrend for the bulls to keep full control. We didn't really consolidate on the hourly today, so we have 15-minute higher lows to be watching. And we can say that anything above 2170 on TVIX, bulls keep the 15-minute uptrend in their favor, and we'll see if we do end up getting a gap up open and a very significant bull move off of, again, just in hindsight. And again, this was, for me, it was almost so obvious a pattern that I didn't look to play it. And that was a lesson for me, and I will not make that mistake next time. But falling wedge into the FOMC, huge breakout. Hindsight, big duh move for me, but congrats to the bulls that did get it. Gold also saw a bull break. It's very notable that gold is inversely related to the S&P 500, at least as far as today is concerned. When that fear picks up in the market, that inverse correlation picks up. And it's also notable that Bitcoin, ever since SPY started its weakness, Bitcoin bulls really shifted momentum on July 31st. And look at July 31st for SPY, and we have 4 big red days. And Bitcoin right now is having 6 green big days and 6 big green days. And that's because of the weekend. So just 2 extra days for Saturday and Sunday, but inversely correlated. It's pretty much a direct correlation between gold and Bitcoin, and an inverse correlation between those two and the S&P 500. That's certainly a narrative that I'm keeping an eye on and paying attention to. I'll cover that a lot more in the cryptocurrency video later today. But for gold, a clear bull break to higher highs, the highest price we've seen on this breakout. Hourly uptrend is still intact. We do have a double top to be watching overnight at 1470, and if we were to see a bear break of 1452, that would be a notable shift in momentum after the double top. If the bulls can hold 1452, we stay in a tightening range. That's the most important short-term support level for me. Silver does not have as significant a bull break, still clear little lower highs, so anything under 1659 is a lower high, but the consolidation on the weekly time frame remains very healthy on silver at this point. And the bull miners also hitting to higher highs. Little bit of an upper wick at the end of the day as the hourly uptrend is still holding, but the bulls want to hold 35.58 on NUGT. Essentially, the hourly trends are what's going to be most important for me across the sector, across everybody, regardless of sector, into the next 2 days, because we know the S&P 500 isn't going to get any meaningful bounce follow through without an hourly trend change. And we know the bull miners, the gold bulls, the volatility bulls, they're not going to get derailed from their trend unless we lose the hourly uptrends there and look for daily consolidation. So hourly time frame will be important for me, and that's why at the end of the day on SPY, this hourly bounce wasn't very meaningful. And again, the fact that we just didn't even change the 15-minute trend, yes, it's a nice move, yes, there's short-term opportunity, but are we changing the bigger picture? And the answer was no. That is certainly not enough, and we're going to run out of time before the bulls have enough time to try and change that trend. Oil, daily inside bar, range getting really tight. Tomorrow, a break of 54.22 would be bearish. A break of 55.59 would be bullish. And that's what I'm going to be watching short term. As far as longer term, we know it's the weekly pattern. And XBI, the biotech sector, pretty much the same pattern here. So we're looking for a weekly higher low compared to 50.59. And we are not at risk of breaking that support level yet. We are currently about 8% above that support level. And last, natural gas dropping to lower lows. Again, the weekly time frame is still in a falling wedge. $2 psychological support on watch. But again, just patiently watching and biding my time, knowing that this falling wedge is a pattern that has been developing for 8 months at this point, whereas the VIX wedge was developing for 3 months. So it was a quicker break because it was a smaller term pattern in terms of time frame. Let's see if natural gas gives us something similar. Keep an eye on it in through August and into September. So that's where we stand overall. Again, I'm looking for a bounce to play out, and then after the bounce plays out and those 4-hour, 6-hour, 12-hour RSI levels cool off, I will be scouting for a daily lower high for bearish entries, as a lot of people will. And then it's all about the weekly time frame. Can we keep the weekly uptrend? I anticipate that we will, at least initially. It's all about the size of the bounce, because on that size of the bounce, we're either going to see a significant bounce and the bulls will breathe a sigh of relief, or a weak bounce and the potential to roll over and lose the weekly uptrend. Let's just look into the future. If we did see that happen, we would zoom out to the monthly chart and we would say the monthly uptrend would be lost. 273.09 is not only our weekly high or low, that is our monthly high or low, and that would be notable. So keeping an eye on that as well. Hope you had a good day. There's a lot going on out there. Hopefully, again, just protecting. Like I said, I entered SPXL too early, but I protected that position all day rather than just holding it and then adding to it and adding to it and then running out of cash and running out of bullets and being a bag holder. That's the worst feeling. I was flipping. So short-term bounces, I would sell some and then I would just reload that cash lower, sell some, reload, constantly freeing up cash so I'm never out of ammo. And we'll see if I'm going to go aggressive buying that dip tomorrow. All depends on how aggressive the bears go. So the analogy here at the end of the video with the next video we got here tagged on. Imagine the bird feeder is long-term portfolios. And that's about it. See you tomorrow. Have a good day. Do good things.
You get out of here, punk!
You broke my bird feeder. That's a fat bear.